What's up, man?
What's up, William? How you doing?
I'm fine, bro. And you?
I'm good, brother. Welcome
Okay.
back. Welcome back to the reunion of our talks.
Yeah. So what are we gonna talk about today?
Oh, actually, it's a long time. It's a long time that we didn't talk. So I have a lot of stuff to talk. But I choose one thing: how influencer nowadays can manipulate the market. You know all the stuff that happened with GameStop,
Yeah.
and on YouTube, on Reddit. For me, it's very interesting.
Yes.
But my question is, how long will remain? You know, it's that the new future. It's on a blade. It's on. I don't know. It's like a bubble, even for the influencer. What's really behind that, and why they are actually right now so successful?
Yeah. So let's try to fix a clear question. So what would you say the question is? How to influence stocks? Or is influencing stocks something new? Which
in my case, it's something new. But I think right nowadays, with all those YouTubers on YouTube, it's even more faster to influence the market.
Okay.
And the thing is, it's something that will remain, those influence? I mean, all those people that will manipulate and tell you, okay, buy GameStop, and 4 million people buy it on the community of Reddit, or it's something that then will disappear because it's a manipulation.
Now I see. Wow, this is like a big question, man. We need to unpack it. Unpack it.
We do the unboxing, right?
Yeah, let's do the unboxing of this. So let's define what is manipulation first. Now, what would you call manipulation?
What I would call manipulation? Okay.
Yeah.
I call all my friends. I
Yes.
have a broadcast of WhatsApp with 500 people, all my friends.
Yes.
And I tell them, look, in this case, I do an example with GameStop. I say, buy all the stocks. I mean, do you have, for example, $1,000 buying GameStop? And all the 500 people will buy it without a reason behind.
Okay.
You know? So I think manipulation, it's just buy as much as you can with more people without maybe, I don't know, like a research in the background.
So the guys at GameStop that did the GameStop on Reddit, they actually had a research.
Okay.
No, they actually did a research and share it with the community, where they say, look, I mean, they shared two things. The first thing they shared is the company had enough cash to buy all the bonds, so they aren't that bankrupt. And second of all, it is short more than 100% the float. I think it was 136%. Okay, so what you have is, I have fundamental conditions that are telling me that this company is not going bankrupt. So you shouldn't short it more than the float. And then I have the second, which is a market condition, that is, it's 136% short. That means if the stock goes up, you will generate a short squeeze. You know what a short squeeze is?
A short squeeze, it's like a loss of money when you go short, and then happens the opposite.
Exactly. So when you short, you're betting the company's stock share is going down. So for you to short, what you do is you ask people who have the shares in their account for a loan of the share. Then you go and you sell it. And then if it goes down, you buy it cheaper and you give it back to the people that lent you the stock. And the difference between the price you sold it and the price you bought it is your profit.
Okay.
Now, if you sold the stock here and then it went up, then you need to buy it more expensive than what you sold it, and that's your loss.
Lost.
Okay, so if you have 136% of short over the floating, that means there are more people that are short than stocks. So that means if all those people want to buy the stocks, there is no stock. There is not enough stock. Because there was not enough stock, what will happen to the stock? It will go up. And while it go up, those people that were short will be losing money. And for them to stop losing money, what do they have to do? They have to buy. And because they buy, what they do, they make the short go up even faster, and they lose money faster, and they need to be buying faster, and the stock goes up faster, and they lose money faster. This is a short squeeze.
Okay.
Yes. So what happened at GameStop is you have a big community that understood two things. The company is not bankrupt, and there's a bunch of guys who are betting it's bankrupt, that if you start buying, they will have a short squeeze. Those are two very good conditions to buy a stock, to bet that it's going to go up. You understand?
Yes.
So from my point of view, it's very difficult to understand why would that be a manipulation. Because when I hear the word manipulation, I'm hearing something that is not true. No?
But at the end, what's manipulation exactly in the market?
Well, it's very difficult. I mean, the SEC has the government agency that is called the SEC that regulates those things. They do have a very clear definition of what is stock manipulation. Actually, JP Morgan was doing manipulation in the market, and they had to pay, I think, like $900 million of. We can check it out. I don't remember. I think it was between 500 million and 900 million that they had to pay because they were manipulating the silver market. How? They were putting buy orders and sell orders that were not real. And they were just putting them because they wanted to push the market in a certain direction. So let's say they wanted to buy silver. So they were showing that a bunch of people wanted to sell silver. So silver goes down a little, so they buy it. Okay, this is one of the way you manipulate the market. It's called spoofing. What happened is you spoof the people. You make people afraid because you make them see that a bunch of people want to sell. So because of that, they start selling, and then you really buy, which is what you wanted to do at the first place. So as a broker, you cannot show orders that are not real. You cannot say people want to sell when you have no clients who really want to sell. So when you do that, you're spoofing the market. That is one of the way they can prove you manipulate the market. Okay. And you can check online. You'll see the whole thing, how JP Morgan was manipulating the silver market a few years ago, and they lost. They lost. So that is a clear manipulation.
Okay, so that's a clear.
A clear manipulation. But let's say again, a CEO of a company, tells you, "I'm gonna sell 1 trillion cars in 2026." And the stock goes up. Is that manipulation? I don't know.
I don't know, like Elon Musk is doing right now.
Well, he's not the only one.
But he's the most famous one doing
exactly.
Well, I don't think it's manipulation. Actually, he's talking maybe what he's really doing, just for the people outside. Spread the word.
Spread the word. What happened when someone goes, they go short Tesla, to give an example, and then they go on TV, they say this is why the company is going to go bankrupt. Is that manipulation?
No.
It's very difficult because the guy is short, and then he goes on TV telling you why it's going down. And he say, by the way, I'm short. So if you sell, that's good for me. You understand?
Well, but that's not manipulation. It's
or when an investment bank write a report, or where there is an incredible fund right now which is called ARK funds. It's a whole family of funds. and a very famous fund manager who happened to be very oriented toward technology. She's a very smart woman, but she is playing a momentum game. Okay, so she's buying the stocks that have momentum, which is the Tesla,
right now.
Exactly, the human genomes, all the stocks that are boom, boom, boom going up. Okay, and
Bull
every
market.
time she buys, she published a report why she's buying and where she thinks it's going. Okay, so with that, she's actually sharing with the world a reason why you should also buy.
But she's helping herself too, because if
That's what I mean.
30% of the people that had the possibility to see what she reported, what she did, then it's
is
okay
that manipulation?
No, actually, it's helping, helping herself.
I don't
and helping
know.
Other people. My case,
you
in my opinion, yes.
Yeah, but it's helping who? Definitely her. Definitely her fund. Definitely.
That's
okay?
The first part.
Definitely her fund.
Absolutely.
And when you get those momentum stocks and you get overall conditions, because we have to go the whole GameStop thing. The reason it happens. So I'll give you another example. When the president of the central bank, when the president of the Fed goes on TV and said, I will keep buying, is that manipulation?
No, actually, no. In my case, not. So what I'm understanding is like, that's no money. I mean, it's not no manipulation, but you can like have an idea what for you manipulation is. But if at the end it's real manipulation, that's the other question. Because you can say like, I bought today the new MacBook Pro. Is that manipulation? No, it's not. You're just telling the people what you did. Some people don't want to tell you, and some people they want to repost on social media. That's it.
But the thing is, if you said I bought the Pro, the Mac Pro, I don't see you get any benefit from it because you're not selling it. Now, if you have a business that is selling Mac Pro, and then you're saying today 1 million people bought the Mac Pro, this is called advertisement. Okay? This is called advertisement. And advertisement, you're doing that because you're trying to influence people to do a certain thing. Okay? So within the limit of what you can influence people, there are certain things that are legal and there are certain things that are illegal. The things that are illegal are called manipulations. Everybody in the stock market is influencing people. All the investment banks make money because they get paid to influence a share a certain direction. And it's always up. Because investment bankers are in the business of raising money. They're in the business of, if stocks price go up, the companies will issue more shares. And when a company issue more shares, you hire an investment banker and you pay them 7% to help you raise more money. And as part of raising money for you, the service they have is we will write a report to tell people how good that company is for the next 3 years, for the next 4 years, for the next 5 years. This is part of the service you buy from an investment banker, which is actually sharing why that's a great company. That is influencing a market. It's not illegal because there are very strict definition of when that influence becomes manipulation. When the Federal Reserve is telling you, I'm going to keep buying bonds and I'm going to keep liquidity in the market, very easy. The Fed is telling you, I want the market to go up, and is influencing all the actors
to buy.
Exactly. When the Fed is reducing the spread on junk bonds on short-term bonds, treasuries, and actively purchasing, actively working in the market as one more player to influence price. They're influencing like investment bank, like someone who's short a market and because of whatever reason, they want things to go a certain way. That is called influence. So the market is always being advertised. When you go to business school and they tell you because of KPM, because of efficient market theory, you always need to be buying S&P 500, and you become that passive guy. And by being a passive guy, every time you buy an index fund, the money flows proportionally to all those the biggest companies, regardless of their valuation. It's regardless of their valuation. Somehow, those schools also are influencing the market. Okay? Because not only they're influencing the action of the people that go to business school, but those people who go to business school end up working at Wall Street and using what they've learned in those books to actually tell you what to do. They go on TV. So literally, the whole financial market is just a big advertising business.
Wow.
Okay, it's all being influenced. Is that good or is that bad? I don't know. We have to ask what's legal and what's illegal, because that's a conversation we can have about what's legal and what's illegal.
So what is illegal? You said that
for example, spoofing, okay, like JP Morgan did in the silver market, is illegal. Okay, that's illegal. And because it's not only that you did something illegal, they have to prove it as well. They have to, this is real proof.
So trying to make like fear to people, that you need to
in this case, it was very specific. Those orders were not real. They were fake orders. Okay, they were posting fake orders in order to make people scared and move the other direction. Those orders were not real. They never had the intention of executing them. It was just a tactic to push the market in a certain direction.
Okay.
Whenever you try to really manipulate the market, you usually lose. When I mean real manipulation, I mean, it's one thing to sit and say, hey, the market is going down, the market is going up, and you're trying to influence. And it's another thing, say, I'm going to provoke a short squeeze. You know what I mean? When you the real thing about making money in the stock market is more about riding the conditions, riding what's going on, than you provoking it. Okay? The market right now is being squeezed. All the short and all the gamma are being squeezed across the board. If you look at what's going on in the market right now, the speed at which prices are moving in a certain direction are not normal. You're getting in 2 weeks, 3 weeks, 4 weeks, the type of movement, the type of delta, the type of return that you would probably need 2 years to get. Okay, so the market is already in conditions for short moves. So if you have a dull market, you don't have a Fed that is saying here is money and pumping fund. I don't know if GameStop would have happened. You understand what I mean? It's a small story compared to what's going on, because you have a very big squeeze going on in the whole market. Now, what is interesting with GameStop, is the everyday person that was able to share with the other everyday person. That means someone, retail investors. That doesn't mean they're not sophisticated. That means they usually have less resources to do research. You understand? Because sophistication is not a question of how much money you have. Sophistication is a question of how much do you understand of what's going on. And those guys, they were pretty sophisticated because they understood what's going on. The thing is, they did that on very low budget. Okay, because when people say, "Oh, those guys are not sophisticated," I mean, you do not understand, because you're talking about people who've been raised playing video games and collaborating globally to actually attack a certain moment in a certain game and then share the booty. They share eyes. So they're used to that type of coordination. And I don't know if they did things illegal or not. You have to look. I mean, I didn't spend too much time looking deep into this thing. Okay. I just understood. I just went to the Reddit and read and see what really happened from that point of view. I don't know if they did something outside of that you could say it's illegal. And I'm not a lawyer to actually determine what's illegal or what's legal in this case, not the judge or anything. But what I'm saying is, understanding that the hedge funds were wrong and that the float of 136% being short is a market condition, considering the whole liquidity that is being pumped in the market and can create a short squeeze. That's a sophisticated understanding. So you cannot say those guys are not sophisticated. What's surprising is the retail, and they were able to do that on low budget, because technology allowed them to empower through technology. It's like it gave leverage. It gave them leverage, a leverage that without that technology you probably wouldn't have, even if you had that knowledge. While Wall Street Bank does have that leverage because they have all the biggest clients, so they can just talk with one fund, and that fund is managing billions of dollars, and they create what they want. Those guys, technology helped them without being a big Wall Street bulge bracket bank, being able to actually influence at the same level. You know what I mean? That's the part that was because manipulating market, influencing market. I mean, Joe Kennedy, that's one of the way he made his fortune. I said before the crisis of 1929, the father of JFK. Okay, Joe Kennedy. It was so much that he was manipulating stocks. He was manipulating stocks and then paying journalists to tell things about companies that were not true. And he used to manage a pool of Irish money of friends just to push market in a certain way that were the famous pump and dump. So they pump a stock that is not true, and then when it gets to the top, boom, they dump, they make their money and they're out. Okay, there is a bunch of those things going on, and then because of that, they created the SEC, the Security and Exchange Commission, to stop doing those things. And he was the first chairman because he knew how to put all his friends in jail.
Oh,
you understand?
God. Yeah.
So the SEC was created to stop those manipulations that they were doing back then, and Joe Kennedy was one of them doing it. And then that's why he became the first chairman of the SEC and put everyone in jail, because he knew what they were doing and who they were. That's how they start defining, okay, until this point, this is illegal and this is not legal. You understand? So manipulation was...
Okay. So what I understood right now from this talk, that the most of the part, it's only advertisement.
I mean find about advertising, because it's about making a transaction happen. The whole Wall Street ecosystem is a big advertisement machine. You understand? The market makers, their job actually is to bring liquidity, and you bring liquidity through advertisement, through
advertising product.
Exactly, telling people why it's good for them to get into a transaction, to buy or to sell. Go ahead.
I read an article that banks, I don't tell you now which banks, but that they pay YouTubers and YouTube to advertise their fund, so that people that look this guy, they would buy,
Yeah.
And it was like, for me, a bank to pay a YouTuber to like advertise their products.
Just another channel, my friend. I mean, every company, You know, that's most of companies don't go bankrupt if you have a CEO who's a good advertiser.
Mm-hmm.
You understand? Because if the CEO is a good advertiser, he will be able to raise funds. He will be able to get people to buy into his vision through the stock market or through private market by raising funds at increasing valuation. This is one of the biggest job of a CEO. His
That's what
capacity.
that's
Exactly.
what Elon Musk is doing. He's like selling emotion.
Well, the thing is, I think he is the best at it so far that we've seen, at least in my lifetime. Maybe before there were other people, but I think at least in my lifetime, he's really good at that. You know, I think the same way that you get someone like Barack Obama, who was the first to really understand the grassroots effect that you get through technology, especially Facebook back then. I would say that at least in my lifetime and since social media are there, Elon Musk is the one that understood it the most. And he played to his advantage, but it's not illegal. It's just one more channel, to influence people to see what you see, and to make that an advantage for you, because otherwise that company would have gone bankrupt because they didn't have enough money before they became um, 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 profitable or being cash flow positive. He was able to raise much more money through the market and don't go bankrupt. You understand? So, and that's also part of being a CEO, is how much do you bridge that gap in the mind of people between where you are and where you want to go, and make them see where you want to go as if you're already there. I mean, that's part of the job of a CEO, to do that. Now, there are limits to it. If you break the law, you go to jail, but those things are regulated, how much you can do, but it's part of your job to do it.
Okay. Wow.
It's part of your job. It's like if you're looking, even if you're going to look for a job yourself,
Yes.
it's an advertising. You have to tell your
How good they are.
exactly.
Yeah.
Why pick me over all the other people that are
I
coming
mean,
here?
I always tell that, like an interview for a new job, it's like lying. If you want to know how to lie, then go for an interview for a job. So, you go there. So what's your strength? I am good at that. I'm good at this one. So, and what are you not so good? Well, this one, but I'm improving. I mean,
Yeah, yeah,
so
yeah, yeah,
it's
yeah,
it's all a lie. It's all a lie. It's all a lie. That's
yeah.
manipulating your job interviewer.
I think it's influencing because, like I said, in financial market, stock manipulation is a felony. That means it's something illegal, but they don't say you can't not influence. You understand? There are limits to what you can do that is still legal, because financial markets are about advertising. So the thing is, they put some limit to the advertising so you don't trick people. Okay. But that limit is very thin. And I think what happened to the GameStop is you had a bunch of guys with very little resources that were able to show why they were right to a big universe of people by leveraging technology and without having all the resources that you could get from an investment bank. You understand? I think that's the part that was interesting, to see it happen. When Joe Kennedy was doing those things, he had a lot of money behind him to pay journalists, to tell things about the stocks. And then he had a fund of other people putting money so they can do the pump and dump and move the price.
I was reading these guys from Reddit, from this community. They are doing, they will do the same process with silver. They are trying to push silver.
Yeah, that's the thing. But silver is a different market. It's a very big market compared to GameStop. You understand? And in GameStop, you had 136% of the flow that was short. I mean, silver is a different game. You understand? And I'm not saying yes or no. I would be surprised they get the same level effectiveness. But the fact is, commodities are going up. So just because commodity going up and saying is because of those guys, I doubt it, because silver is been going up. You understand? Before all that, and the ratio between silver and gold is also being switching, which is giving more momentum to silver over gold. So those things are already in play. You understand? So I wouldn't be too quick to say, oh, although in 1980, there's three brothers, the Hunt brothers, that tried to corner silver.
Really?
Yeah. In 1980, yeah. And those guys, I think they proved they did something wrong. No, they really tried to corner the silver market. But again, usually when you try to corner one of those things, you end up losing money. You understand? Because you're creating something that is artificial. If you didn't go, because how does the corner come? The corner come that you start buying silver. No, let's say you start buying. And because you buy so much what's going up, it goes up. Okay, how are you gonna sell it now? You understand? You become the market. You own so much of that thing, you can't go out. Because the moment you start selling, you'll plummet the price. You understand? You're so big, you become a whale. So the moment you put out the order and they say, oh, there's a bunch of silver being dumped into the market, the price will crash. So it's not that easy to say, oh, I'm going to corner the market and make a bunch of money. You understand? You have to get in first, get a bunch of people to get in. But if you buy so much that you can't get out, you won't make money. You understand? It's not that easy, I think the GameStop thing had a very particular conditions that made it so. And silver going up, I don't think has nothing to do with any Reddit group or you understand what I mean? Things are more fundamental. What's going on with commodity, and it's across the board. It's grain, it's precious metal, it's industrial metal. I mean, iron ore is going up, copper is going up. What happened is that gold and silver. Yeah.
Can I ask you a question, Will? So imagine that if you were now, I don't know if you are, if you're not, in the community of Reddit, and you start to read about, this process to buy GameStop. If you were one of these guys inside this community, what would you do? Buy like we did, or just stay there and not doing anything?
So I think we had that conversation, which is you don't buy or sell because someone told you, but you buy or sell because you understood what the person told you exactly, and you came to the same conclusion. So if you understand the way the GameStop operation was done, as a trader, it's a legit trade. That's what I mean. It made sense to do it if you got there early enough and understood what was going on. It wasn't a bad trade. You understand? It was a rational trade to do. Because it was pretty clear that the hedge funds were short more than the float, which created the potential for a squeeze. And the company wasn't in so bad shape as everybody thought. And the moment that people realized that, it's going to be a short squeeze. So it wasn't a bad trade from a microstructure point of view. You understand? It wasn't a long-term investment. It was literally exploiting
short-term.
Exactly. A short-term anomaly, a short-term dislocation. And as a trader, if you look for those things, it was a legit trade. Now, if you don't understand why it was a legit trade and you trade anyway, okay, that's each person.
It's luck.
Understanding. But for me, it was a legit trade. You actually look for those situations, you understand, where you have a misvaluation of an asset and a catalyst that will actually push the price in the direction that you need it to go. And the catalyst was that those guys were short too much, more than the float. Understand? So that's what I'm saying. Those guys are sophisticated that realize those things.
Because they did the research behind.
Yes, they did their homework.
They didn't pick just the stock and say, okay, come on,
No.
it's like $2 per share. Just buy because it's cheap.
Because
They did the
it's cheap.
research.
No, exactly. It was well done.
Wow.
So if you look at it and you understand what I say, you know what? It makes a lot of sense. You just go and do it. You analyze it yourself. You say, you know what? Boom.
And
So
I think the part when you said that the company was not in bad shape, that's also a good criteria to buy, because I remember when like 15 years ago, Jeff Bezos made an interview that Amazon was going down, but at the stock was going down, but Amazon as a company was going up.
Exactly.
So that's talk to GameStop. It's like a good research behind.
Exactly. I mean, GameStop was being punished by hedge funds going short. But the way they were going short, they were saying the company's going to go bankrupt. Now, the guys that made the research, they're saying, yeah, the company is not a high flyer, but it's not going bankrupt. Why are you short 136%? That means you don't think it can go up. So bad assessment, boom, you have from an intrinsic value point of view, you see the mistake. Because just because something is cheap doesn't mean you should buy it. You need a catalyst. Understand? Just because something is cheap.
A catalyst, it's again just for the people also.
Yeah, I'll tell you what a catalyst is in this case. So let's say I make my analysis, and from an intrinsic value point of view, I realize that something is cheap in the market.
Yeah.
Okay. I buy it. I might be waiting 10 years before people realize that it was cheap. And if people don't realize it's cheap, they're not buying it, so it's not going up. I'm not going to make any money. Because for you to make money, you need people to agree with you.
Because more people, more buy, more goes up.
And then it goes up. Because if they don't buy, even if you're right, but if you're right too soon, or you're the only one who's right and everybody is wrong, you still lose money.
But bro, at the end, if you talk about that, you said, that's a channel more social media to make advertisement. Yes. But how this guy did, that did the research behind that actually was too cheap, because actually GameStop, it's a good company, and they use the channel of social media with those community, and all in the community agree with this guy. Maybe that's a new way to buy stocks without, manipulating, because actually it's the truth. You know what I mean? They did the research.
Yeah.
They said it was too cheap, the stock.
Yeah.
Other people in the community agreed with them, and they buy. And they bought.
Yes. Yes. Like I said, they didn't say it was a good stock, because GameStop is in a very difficult position as a retailer. Yeah. But it wasn't going bankrupt like the hedge funds were betting. So there was a misvaluation. But then there was a catalyst. What is the catalyst? The potential short squeeze. Okay? Because those guys are so short, if there is an event that triggers a buy, it will fly. Because from a microstructure point of view, there is a catalyst, which is people are short more than the available stock. So you can create scarcity. Okay, a catalyst is something that accelerates what you see. If you have something, if you have a very good analysis on a market situation and there's no catalyst, it won't happen. It's not enough for you to be right. You understand? It's like, I think it's Ray Dalio that said something: to make a lot of money in market, you have to think the opposite of everyone else, but you have to also be right. Okay, so what does that mean? You have to take the minority position. That means you have to take a position that nobody is taking, okay? And he said you have to be right. I think for me, it's not just that you have to be right. You have other people have to think that you're right. Because even if you're right,
but you're alone.
Exactly. You understand? It's not even about being right or wrong. And right or wrong is not a simple thing in this case. It's how many people agree with you that you're right and how many people disagree with you and think you're wrong. And and from a making money point of view, it's really about perception. It's really about what people think. And I think instead of what Dalio said, I think I prefer to go with what John Maynard Keynes said. You know, it's like a beauty pageant. It's not the most beautiful girl that wins, but the girl that was voted the most.
Mm-hmm.
You understand?
Yes. Yes.
It's the one that was voted the most. So it's not about being right because scientifically with my calculation and I know this girl is better. No, is what is the one that's voted the most in that competition, or how many people think you're right? You know, how many people agree with you, and how long it will take them to agree with you? Because if it takes them 10 years to agree with you, it's better putting that money somewhere else, even if you're right. You know, and that's when I think the GameStop is so interesting, because the catalyst was there. The hedge fund were short 136% the float. So that is an incredible.
That's a lot.
Yeah, I mean, that's a catalyst, you know. So it's not that they had a misvaluation, but they were too aggressive in their views.
Yeah, so because maybe they saw just GameStop. It's a retail company. Done. It's all digitalized. PS5, done. Xbox, they're done.
Done. Yeah, markets is a lot about catalyst, man. It's a lot about catalyst. You know, it's not only about from a valuation point of view. It's really about perception. It's really about influencing. It's really about general conditions. You know what I mean? Mm-hmm. It's like you're looking right now in the market. Is it going up? Of course it's going up. Why? Because conditions are the Fed saying, I'm financing the party. I'm financing the party. It's not just a question of rate. It's a question of quantity of money. The amount of money that the Fed is pushing directly through direct purchasing. You understand? So this is influencing the market, and this is the catalyst. And you see all those things. Are they overvalued? It depends. I mean, I'm not a value investor, so I don't really care. You know what I mean? So, and I think the thing about, you know, some people are talking about systematic value and systematic values. That's a different conversation. I think you're in market to try to understand the dislocations that will give you money. And for that, you need two things. You need to understand why the dislocation is there and what is supposedly a catalyst that will actually manifest that close the gap between where you think it should go and where it is. And if those two conditions are not met, it's very difficult for you, even if you're right. I mean, you can go to sleep, say, I'm right, they're wrong. Yeah, but that's not the point of this game.
It's about whose girl has the more votes.
Exactly. You know, so, and that's where influence becomes a part of the game, because you might make your analysis and then you publicly share it with everyone. That's a way of accelerating that more people understand. Exactly. And most fund managers do it. They go on Bloomberg, they go on MSNBC, they go on TV, they write blogs, they write research, they share, they go at conference, because they're trying to get more people to see the opportunity to say, exactly. You know what I mean? So in that sense, where I see there is the differentiation between influencing and manipulating. And influencing is a fair game, because the stock markets, bond markets, commodity markets, all those markets, they're about marketing. That's why they're markets. They're driven by marketing. It's called marketing, and influencers, people trying to. You know what I mean? Markets are
It's
about
called market and market.
That's why they call market. It's
But it
because it's
is.
about
It is.
marketing. That's where the word comes from. You know what I mean? Hey, my product is better. Hey, my product is better. That's the market. It's their marketing. They're trying to influence you to buy things. But the biggest influencer, I'm telling you, is finance books, man. They give you those formulas that you're supposed to.
Books.
Yeah, because they give you all that little formulas that you study at business school when something is cheap, when something is expensive, and for the last 12 years, everything that is cheap stayed cheap, and everything that is expensive became more expensive. You know what I mean? Because they tell you that, but then they don't tell you, no, this is a game of influencers. So if I have a big player like the Fed doing certain things, it will happen anyway. You know what I mean? They don't tell you this.
It's a crazy industry. It's
I mean, it's beautiful. What I like about markets, it's the number. It's a number game. In life, usually it's who you know that makes a difference in your life than what you know. That's explained. Like 80% of people's result is about who they know, not so much about what they know. Okay, that's the way the world works, and that's why we have so many issues unsolved, because the real people. And when I say know, I'm not talking about just book knowledge. We're talking about specific knowledge. I mean, that you know something in a way that few people understand it. Even if you're in that position, it's not a given that you will advance in life. But if you're part of a great network, that means you were born in a great family because you have a great support network from Family Connection. You went to a good school where all those guys in that school and all those girls in that school are well connected, and they most likely will get in a good position today if you make friends with them because you're part of that network. If you studied at certain school close to certain VC guys, you most likely you will get the money. I mean, it's really it's about your network. What I like about finance, exactly, it's about who you know, and most big CEOs, it's really about who they know. That's why there's so little innovation. That's why it's stock buybacks that sustain the market. But that's again the reality of things. It's neither good nor bad. It's just the way it is, and you see it and you say, okay, that's just the way it is. But the thing with financial markets is that I think it's the only place where what you know has a little bit more weight than who you know.
Yeah.
I can tell you it's only about what you know, because we can get philosophical about this thing and say, okay, but how did you get to what you know? Okay. But when you understand a situation and you see the dislocation and you understand that you need a catalyst, and you pay the price to get to those conclusions, because when you didn't understand them, you lost the money. And because you lost money, you learned a lesson and you came to that understanding. At that point, it's really very low who you know. That has absolutely nothing. If you understand what's going on, and that's what I like about financial markets.
It's like a place that at the same time can be very dangerous. It can be, but it's a place that everyone has like a place to stay there. Then
you understand?
Up to you how to
it's up to you. Exactly. It's really up to you.
For like an actor, if you know the director of a movie, you have made more chance to get the role.
Yeah.
And maybe you, another guy that would be better for this role, but he doesn't get the role because he doesn't know this guy. Maybe.
Yes, maybe. Or even if you're two guys, okay? You're two guys with the same level of artistic capacity. Okay? For some reason, that has nothing to do with the artistic capacity, the director who knows you or you were recommended will take this guy because it's just one job. Exactly. That's not the case with markets. With markets, if I'm saying this thing is cheap, I can buy it, you can buy it, we all can buy it. You understand? It's not that if I buy it, you're out. No. I say, you know what? Let's buy it before the big guys understand the opportunity. So we can be 1,000 people buying it. And then the big flow comes in, and then we get out at different prices. You understand? It's at least for me, the way I am right now in my life, I perceive my interaction with markets in a way more different than before.
Why?
I'm telling you because of course, and I think it has to do with after you paid the price of making so many mistakes, you get to value the fairness of it. You understand? You value the fairness of it. That means everything you've learned, you've paid a price to learn it, and then you can do what you want with it. The market is always there. You don't have to always be in it. You just have to be in it when you think you know something.
Yes. It's like when you want to be a soccer player, you don't have only one chance, plus minus, that you have like this talent scout that is looking for you, and then just for this soccer game, and then the next time. So the market is there. You pay the price. You could learn the lesson. If you want to come back, you can use it again.
You can always come back. It's not like, oh, if I don't get in the team at 18 years old, when I'm 30, I'm out of the game. You're never out of the game in this thing. Only if you put yourself out of the game.
You can trade, invest even at 80, 85.
80. Look at Warren Buffett. You understand? Okay. And everything is accumulated. And if you understand that it's more about not being wiped out. And I'm talking about any type of investment. You understand? You can be systematic value, systematic growth, doing intrinsic value, doing momentum trading, doing passive investment from an index fund.
What kind of guy are you, if I can ask you?
If I have to say, I say I'm more a quant global macro.
What's that?
It's like global macro is like you look at the way of the world and how central banks, government, and the big money flow is making decisions. Not what they say they do and why they say they do it, but actually understanding what they're doing, what it's going to provoke, even if they're advertising something else. Okay, so that's the whole big game of understanding what's really going on, understanding the underlying machine of the economy, and understanding the decision and the movement that is happening, what will it provoke? And based on that, you trade, you look at indices, at currencies, at commodities, at sectors, but you don't go into the underlying into the individual stocks. You don't get at that level because you're not from a valuation point of view. You're looking more at the big trends from a global macro perspective.
Okay.
Okay. And it's not better or worse than any other thing. It's just that because of my personal history of how I got to approach markets, especially when my first experience were through emerging markets. So in emerging markets, what politicians do in the global economy has much more effect on the price of a company, of a stock, than how good the management is. Okay, because in explaining a price movement, government risk, political risk is way bigger than the idiosyncratic risk of the company. So you don't get that much diversification in emerging market just by adding more companies, because the systemic risk is the main factor. So if you're going to invest in emerging markets, you make a lot of attention to understanding overall global economy and what the governments are making. So because of that formation, I end up, looking at everything that way.
So it's more a political decision, what the political
exactly. So it's more about what are central banks, what's the money level, where things are going from a global point of view, from an economic point of view, and then that brings you to, okay, am I long stocks or short stocks, but not am I long Apple or Amazon? No.
Yes.
And within stocks, am I long tech or am I long industrial? Or am I long industrial, or within industrial, am I long I don't know, more mining or more manufacturing? You understand?
So it's more general. It goes more general.
Yes. And then you say, okay, so based on what I understood about the global economy, what position do I take that express that view? Looking at currencies, So am I long emerging market currencies or short emerging market currencies? Am I long the dollar or short the dollar, which is the same thing? You understand? So it's more those type of things. Am I precious metals or industrial metals? Which one? Or is it all of them? And you have to make an understanding of why, and then you go and you test. That doesn't mean you're right. You can be wrong, but what you do is the way you position yourself is, even if you're wrong, you can lose money, but you're not out of the game. That's the most difficult thing to do.
Okay.
And to do some of this on the execution part, I use some algos, to help me execute. So when you have the view, you use some algo, and that helps. That relationship man-machine helps with scaling. It helps with not being completely emotionally drained too early in this game, because it's really about psychology. It's really about your psychology, your ability to sustain. And you make mistake, you don't make mistake, you live with it.
Emotion can make you a lot of mistakes in the market if you use a lot of emotion on it.
Even when you're winning, even when you're right, it's draining emotionally. You understand? Because you're right and you're saying, wow, should I get out because maybe I start losing, and okay, how long do I stay? Okay, it meets my target. Should I get out or should I stay longer? All those things, you can actually use some algo that help you manage those type of things and help you, so you're not completely broke emotionally, because you can get to a point where you cannot sustain things. You know what I mean? But again, there are very good players at this. There are people that have been very successful. I don't think there is one way to do things. I think each person, based on what you understand. I have friends who are pretty good at understanding new trends, new technologies, and I have friends who are more event type of traders. So they go at the corporate level and see when there is divestitures, M&A. They're more like, you call them. They do risk arbitrage. I mean, there's so many things people can do, and I have most of my friends who are just to their 401k, which are passive investors in the market. And but when I was doing this with other people's money, it was more the global macro, and that's what I kept for myself. I mean, it's only my money.
Vision, your money.
Yeah, it's just my money, my vision, and when I win or lose, I don't have to explain too much. You know what I mean? Especially when I lose.
So you have more free room, we can say, like free space.
Yeah, I think for me, it's the ability to actually test better at the extremes, because when you're managing money for people, you have to be in the market all the time. You understand? Because you're selling a product, so you have to be in the market.
There. Yeah.
You understand? In my case, there's sometimes, if you can pick when you're in the market, you can concentrate that risk for that moment when you see an asymmetric bet. And then it makes sense. And then if it didn't make sense, I get the next 2 years, 3 years, I don't do anything, and I keep working on my research that has nothing to do with markets. that has to do with more technology and something I'm building. So it makes sense for me, you understand? And when I see an opportunity, I can sit down, analyze it, 2 years, do my information gathering, get a view, boom, and then you do it. And then works, doesn't work, tell me in a year, in 2 years, but then I can continue to do something else. You know what I mean? But when you're managing people's money, you have a product, and you cannot tell the guy, hey, wait, I don't have any opportunity. I'll keep the cash in the bank, and then when I want it, I'll say, they would say, if you don't have an idea, give it back to me. That for me create the kind of pressure to force you to be, in a market where you shouldn't be if you don't think that you exactly, you understand what I mean? Because if you want to be in the market, go buy the S&P 500 and just index this thing and benchmark this thing, and you'll do well. You know what I mean? You'll do well. You'll get your 6% on average over 30 years if you're lucky. If you're unlucky, you'll get 2%. You'll still beat the inflation that has been 2% so far, and let's hope that's all it will be. That's it. But if you're looking about finding an edge, I don't know.
Extreme, where you can use, test, and do your stuff.
So there are things that I do that I can have that is all the time in the market. Okay, but those things, they will give you the type of return you get from an index fund or a little bit more. But if you put yourself into this, you need to be raising a lot of money for it to make sense. But when you're managing not a big size of money, it's just you and you need the money to do other things. Well, for me, what works is, when I see a very obvious opportunity that is so obvious that I don't even need to explain to me too much, you just go and, make a position. But it's more from a global macro perspective. Yeah.
Wow.
And I think the next 10 years are going to be incredible for global macro. Because the type of things I see central banks and government doing in the world, this is the typical thing where global macro people thrive,
So what's the number one reason that you think in the next 10 years?
Oh, we have big shift. We have big shift from the fixed income point of view. I mean, you have big flow of money that are going to be getting out from one asset to another asset class. You understand? You have big shifts that are coming up in fixed income. You have big shifts that are coming up from a tech point of view. You have big shift coming from industrial companies. You have big shift coming from commodity. You'll have money flowing from secular trend. I mean, 20, 30 years going in one direction, going to another direction, and if you catch those flows, those are going to be you have Brexit, you have the euro, you don't know if the euro is going to continue or not. It's like, those are very big shifts from a macro point of view. And we're talking secular movement that have been 20, 30 years going in one direction and might start shifting. And then the timing of that shift, I think it's going to be incredible for those type of strategies, for the people who have the time, the energy, and the knowledge to actually exploit them. Because you need both. You need to have the time, the knowledge, the energy is the resources and all that's required to take advantage of them. We'll see, but I guess, those fun, those guys are going to outperform in a big way. It hasn't been that easy for the strategy in the last 10 years, but because, just being long tech for the last 12 years, there was nothing better than that, just doing that. But I guess the next 10 years is going to be different. That's what I think. I don't mean I'm right, but that's what I think.
Wow.
But I think to go back to what you just said, which is why we're talking, everybody's trying to influence the market. You understand? It's a market, so it's all about marketing.
It's a market, it's marketing. Influence.
Exactly. The thing is, manipulation is a felony. You can go to jail to do it. But influence, everybody's trying to influence that market.
You can do it. So just to find out where is like the limit to influence, and then push it to the limit, and with Also, the link you can
You have all those guys all the time going on TV saying what they think. They're actually
and
talking their
Bloomberg in the
position.
morning. Yes.
You understand? They're just talking their position. You have those guys from Gemini, the Winklevoss brothers. Will Bitcoin go up or go down? Really, each trader decide. Okay?
Exactly.
But those guys, they have a market because they have a brokerage firm and they are long Bitcoin. So for them, they all the time need to market Bitcoin so there's more liquidity. Everything they say on Twitter, all the time they're marketing. Hey, this is the best thing. This is the best thing. This is the best thing. And it's in their advantage to do it. And they should do it because they have a business to run,
And
which
they
is
need to
about
do it.
trading Bitcoin. You understand what I mean?
Wow, bro, it was a great talk, my friend.
Yeah.
I missed it, and I go back with all those informations. What's really about? What is the manipulation and what is influence?
Yeah. That's cool, brother. Take care.
Take care, brother.